LAProbateExpert.com. And in the course of serving clients, attorneys, and investors in selling real estate and in probate real estate in particular, and legal real estate, one of the key vendors we work with is insurance. So one of the guys who I've talked to in the past, who's helped us in sticky situations and has some great information to help us with, is Scott Walker. So Scott, say hi.
Nice to meet everyone. Thank you for having me, Bill.
Sure. And Scott, just real quick, your company, you're a farmer's insurance agent as well as
Yes,
independent?
that is correct. I'm an independent farmers insurance agency owner in Redondo Beach.
Beautiful. I think it's beautiful Redondo Beach is the proper terminology.
Yeah, we're
And,
very lucky to have our office here and live here as well. So,
and how long have you been in business in Redondo Beach or in insurance?
I've been with farmers about 7 years now.
And so give us a little background. Where'd you grow up and then how'd you get into insurance?
Well, I actually grew up in New York.
No way.
Moved out to California in '81 after graduating college. Spent a few years selling encyclopedias, and then got into the sporting goods business and owned a sporting goods company for many years during the inline skating rage,
Wow.
which eventually died out, and moved on to the insurance business following that and some other sporting goods ventures.
Now back up real quick. Where in New York do you grow up?
I'm from Howard Beach, Queens, New York.
So my son-in-law is from Plainview, and then his father works in Oyster Bay, so kind of
Okay.
near
Yeah, we
Queens.
used to go to Oyster Bay all the time.
Yeah, exactly. So you get into insurance, and farmers know, to me, farmers is always more of a plain line, but I know you handle specifically insurance for investors. In fact, I've seen you at trade shows, and that's how we've come to meet each other over time. So tell me about the particular part of your business that relates to real estate investors buying either fix and flips or rental properties.
Oh, absolutely. Thank you, Bill. So, farmers insurance does insure landlord policies. And those are really for, buy and hold investors that have good quality 1 to 4 unit residential properties that we run through the farmers system. And the biggest advantages with farmers, of course, is it's a special losses, so that pretty much every peril is covered except those specifically um, excluded by the policy. Now, when we come to fix and flip policies, we have a couple of different markets that I use, including Foremost, which is a specialty division of Farmers. Now, we use Foremost for our basic interior cosmetic upgrades. So if you're just doing, the floors and the kitchen and some paint and landscape, and you're looking to fix and flip in 3 to 6 months, the vacant policy is fantastic. If you're doing something that's a little bit more extensive, including taking down load-bearing walls or adding square footage, then we have a couple other markets that we go to, including Zurich, AU Gold, and USLI. So we have a variety of markets depending upon what the needs are. In the very rare cases where you do have situations like fire losses or extensive losses, no roof, things of that nature, then we have to go to some outside markets. So my agency is set up so that if Farmers or Foremost doesn't carry a product that would meet the client's needs, I am able to go to outside markets as well.
Great. Now, a lot of my business is probate. So a family member owns a property, passes, deceased, and an heir, hasn't yet established the authority to act on behalf of the state in some cases, but the property is vacant. The decedent's personal property is there, is not being rented, let's say.
Correct.
And so the question is the insurance policy that was in place by the decedent, does that still cover the property during, let's say, the pre-probate process before they have authority, and or during the probate while they try to maybe sell the property?
Well, it's a very good question, and I'm not a lawyer, so I can't give you the legal situation relative to who the insurance would have to be named under. That's pretty much based upon, the final wishes, I guess, of the deceased and who's in charge of the estate. However, if no one is living in the home for over 45 days, and the policy does need to be converted from a residential or a homeowner's policy to a vacant policy. And we do write our vacant policies through the Foremost division. And the most important part of the vacant policy is to make sure that you have vandalism and malicious mischief coverage. So if someone should break in and start, opening up the walls and stealing the copper pipes and, and the wiring, that you have the coverage for that. If there is an insurance loss and no one is living in the property and a claim is filed, the insurance company claims adjusters will look at the status of that property. And if they find that it's vacant, they'll do their research. And if it has been vacant for over 45 days or 60 days, depending upon the policy, then the claim can be denied.
So almost surely then, anytime there's a probate, somebody needs to get a policy converted or a new policy. You're saying that because 45 or 60 days is not going to cover a probate, for example.
Correct. Yes, it should be converted to a vacant policy.
And how hard is that? If I was an administrator for an estate and my family member had the policy, what's the process to change it from their homeowner policy to a vacant home policy? Is it expensive and is it cumbersome to get done?
As far as for the cost, the cost of a vacant compared to a homeowner policy for the same property, you're looking at a probably 75% to 100% increase in premium, strictly because of the added risk of a property having no one living there. Some of that can be reduced, especially if there's full-time monitoring and alarm systems and things of that nature that are installed, so that when the property is being checked on a regular basis. As far as for the difficulty, it's really not difficult at all, as long as there's a vested interest. So it may come down to, who the named insured is on the policy. That's where I think on the probate end of it, it can get a little bit confusing and maybe a little bit difficult. But as far as for, if you had a farmer's, and I've had this happen, occasionally, you have a farmer's homeowner's policy, the homeowner dies and the children, take over. And as you go through the probate issue, it's usually named to whoever the trustee is, if there was a trust in place or something of that nature. And we just transfer it to a vacant. If it's under another company, many other companies don't offer vacant policies. With farmers, we do it through Foremost. So it's a pretty easy transition.
But it sounds to me like in every case, if somebody passes, they should get on the insurance within the first 30 days, because odds are the policy is not going to cover if it's vacant, right?
Correct, yes. If no one's living there, absolutely, for sure.
Okay. I know you work with investors regularly because I saw you recently at a trade show talking to hundreds of people. Yeah. What do you see as the biggest challenge people have when investing in real estate? You must work with some successful investors. You must also work with some that struggle with it. What do you see that the successful ones do that perhaps the struggling ones don't?
Well, successful real estate owners have been through the struggles. I don't think you'll meet anyone that's been involved in real estate investing who hasn't had a loss here or there, because it's just the nature of the game. It's like anything else, you have to learn the ins and the outs. From my area of insurance, where I see people go wrong, especially people just getting into businesses, they don't understand the difference in the insurance cost between a standard homeowner policy or even a landlord policy and a fix and flip, a vacant policy or a renovation policy. It's going to be 200, 300% more, and they don't take that into account when they're looking at their cost of renovations, or if they're wholesaling an ROI for an investor. So, my main responsibility to new investors is to educate them on the different types of insurance. And for established investors is to find the best product for what they require to keep their costs as low as possible.
And so you say to educate new investors, how do you do that?
Well, one thing I have is I do have a PowerPoint that I send out that goes through a fix and flip insurance options, describes, doesn't talk, it's a PowerPoint, but describes the difference between a vacant policy and a renovation policy, and then what's called a builder's risk policy, which is for your larger renovation projects, including adding square footage, extra stories, things of that nature.
So you cover homes. Do you also cover multifamily units?
Yes. So residential would be 1 to 4 units. Anything 5 or larger is going to be a commercial policy. So that moves us out of the Foremost appetite So we couldn't do foremost vacants. Then we look at USLI and Zurich into the commercial vacant policies. So yes,
And, but I'm not talking about vacant, but stand if I'm buying an apartment building that's already up and running and they
oh
have
yes,
insurance in place, but
oh sure,
I run it by
absolutely.
you
We
for a
do, yeah,
quote to see if you
yeah.
get better insurance.
Farmers, Farmers does a large percentage here in California, especially of apartment buildings, HOAs. If you're buying a unit in an HOA, it can be pretty confusing. I think that's one area that real estate investors, if they're buying into an HOA or a two on a lot, for example, that has an HOA, is understanding that your insurance on that HOA is completely different than a homeowner. It really depends upon what the coverage is through the HOA master policy.
Right.
So walking through that HOA master policy and the CC&Rs, which are the legal requirements of the HOA master policy, can determine the actual cost of a condo policy. And the range could be anything, from only having to cover a basic water loss, say $30,000 or $40,000 for the unit owner, up to having to replace the entire condo, including flooring and kitchen cabinets, bathroom fixtures, in which case a couple of $100,000 of building coverage is going to be required.
So you're a business owner. You must have enjoyed a good year in the last year, given the increased housing activity. I would think. Has it been good for your business the last year too, with all the housing activity?
Yeah, it's been trending in the right direction, thankfully. COVID, which was, unfortunate and caused a lot of pain for a lot of people, was pretty good for the insurance business in the fact that insurance companies, including Farmers, did offer rebates and credits on auto policy premiums because people just weren't driving anywhere, excuse me. And as a result, I think a lot of people started looking at their insurance and asking questions, and that's what makes our business valuable. I had a client the other day say, "I sell fear," and I say, "No, I I sell satisfaction of the inevitable, because inevitably, excuse me, you're going to have an insurance loss eventually. It may be a life insurance loss because nobody beats Father Time, but at some time you're going to have an insurance loss, and my obligation is to make sure that my clients understand what their risk profiles are and understand how we can mitigate that risk as much as possible."
So, as a business person, you also are looking forward and trying to understand, like I am, where's the economy headed? What do you see in the next year as far as your business activity and the economy in general in Southern California, the area that you service?
Well, here in Southern California, or in California in general, we're looking at, I think, a great opportunity for adding ADU units to single-family homes, so that homeowners, with the cost of homeownership becoming so expensive, they can offset some of that. Not everyone agrees with the addition of additional housing units on private property, but I just think it's better than having massive condo complexes going up, on the corner because somebody buys two lots and they can now put up 12 or 14 units. So I think ADUs is a big area of growth. I think it's going to help offset home prices a little bit, get some rental income, and increase property values even more. So I'm looking forward to that. And also, I think the rental markets are becoming more of an avenue for insurance seekers. One example is Farmers is actually coming out with a new condo and renters program for 2022. We haven't gotten the actual information on it yet, but we're expecting to see some better discounts when combining renters policies and auto policies.
Nice, nice. Well, everybody loves the ADU until it's their next door neighbor building it, right?
No, exactly. I mean, but the challenge is this. The state passed these. And I'm not an expert in zoning or anything, but from my understanding is if you're within half a mile of a properties within half a mile of a bus stop, you can basically put whatever you want on there now, regardless of city zoning ordinances. So I think that there has to be a happy medium between the two, and I know there's some definite lawsuits going on right now about that.
You'd be careful how those laws play out. I had a client who, was buying a property. It was zoned LAR2 and it had a single family home and it was big enough to, with a new law, put a total of 4 units on it, or three more reconfigured
Correct.
for. Turns out you can do that as long as those rental units are all under the low income statute, Section 8. Well, this was an area where he was looking at 3,000, 3,500 a unit,
Yeah.
and the Section 8 won't get that kind of income. So we were in escrow. The law passed, kind of surprisingly when it did, after election November, and we actually fell out of escrow, and the estate lost about $200,000 because the property was worth less after the law rather than more. Now, theoretically, it's worth less. They'll have to sell it, and somebody will build 4 units on it, but it's just interesting how these laws sometimes backfire.
Yeah, well, also Section 8 brings up other insurance issues as well, so.
Yeah, a lot of things.
Unfortunately.
Well, look, I really appreciate the chance to chat with you today, and I think sometimes people think of insurance as being a dry subject, but I think the real opportunity is you're obviously very knowledgeable about the real estate market and the real estate practices. You're generous with your time and information about it. If somebody had questions and want to talk to you about a prospective investment or just general homeowners policy, how would they get a hold of you?
Well, it's pretty simple. I mean, one thing that I pledge to all my real estate investors is that call me or text me at my office at 310-374-6920, 310-374-6920. To get a property quote, it's real simple. I just need the location of the property, the estimated closing date, the renovation budget, and a description of the renovation. And usually within, 24 hours at maximum, you're going to get back an estimate or an indication of what the insurance should cost. And in addition to that, if you're buying as is, we'll let you know if there's been any insurance claims on that property that have not been disclosed to you as the buyer.
I'm so sorry, the back of my wife's dog is going nuts. So it
It's
wasn't
okay.
distracting to you.
Must be
Or at
the
least-
Amazon delivery
Okay, so
guy.
we're going to take your contact info, your phone number. We'll put that in the show notes here below in the video.
Perfect.
And I would encourage you, if you're interested in real estate, reach out to Scott Walker. Scott, I know I saw at the LA Grand Expo. I go to Lloyd Siegel's vendor. Do you go to that program at all?
Yes, I'm there at pretty much every event. I have a table there and have my presentation and a bunch of handouts on different issues related to not only investors, but also other insurance information as well, because we do all the property and casualty, life insurance, and things like that.
Yeah, I've seen you there regularly, and so that we're referring to the LAREIC, the LA Real Estate Investment Club. They meet normally the second Thursday, but this month in December will be the first, December 2nd, at UCLA's Ackerman Hall. I'll tell you, I hate going to UCLA. I told you how good an event it is because there are a lot of people there. But as a Trojan, I can't imagine going there again, but I will to support Lloyd and a great program for
Let's just
investors. So
hope
if you're a
that there's not
first-time
a
investor,
basketball game at the
we're looking
same
to meet
time.
people or want to meet some great vendors, show up there December 2nd. And I'll have the link as well in the show notes for that. Meet Scott. He's normally there the second Thursday of the month, but this month is December 2nd. Scott, thanks so much for your time today. I appreciate your generosity of spirit and being willing to help people out. And we will talk to you soon.
Thank you for having me, Bill. Appreciate it.